Hello, I'd like to step you through a brief introduction to the home office deduction, which is reported for Schedule C filers on Form 8829. And there's a few things about it. The first thing, the definition of a home office is an office that is used regularly and exclusively for your business. You don't have to, it doesn't have to be your only place of business, and you don't have to use it all the time, but regularly and exclusively. So one of the places that taxpayers get into trouble here is when they don't use their office exclusively for business. So people will want to put a laptop on their kitchen table and call it a home office. Well, that's not exclusively. If you have a separate room and you set it up as a home office, but you put a guest bed in the corner, that doesn't meet the definition of exclusively. And so lots of times tax clients are kind of wanting us to bend on this particular issue, and you got to be careful on this one, because that exclusive part is kind of critical. So the way we do this is we put on line 1 the area that we're using for our business. Now, let me back up just one step here, because there is one exception to the exclusive rule, and that is the storage of inventory. So imagine you have, imagine you have some kind of retail business and you have a storefront somewhere else off-site, and instead of renting a warehouse or a storage unit, you store some inventory in your garage. That sort of allows you to get by the exclusive rule. What I would do in that case is I would probably literally maybe put some tape on the floor and outline an area that is for inventory storage and measure that square footage. It's kind of a rare or unique circumstance, but it does exist in a few places. So let's go back to sort of the regular home office, a person who's a salesperson, or a bookkeeper who works out of their home, or somebody who's got a home-based business that's set up a home office that's used regularly and exclusively, and let's assume it's a whole separate room. And I'm going to keep the math pretty easy here. Let's say it's a 10 by 10 room, so line 1 would be 100 square feet. And to keep things super simple, I'm going to make it a 1,000 square foot home. So line 2 would be 1,000, and then we would put on line 3 a percentage, 10%. Now, of course, I made the numbers super simple in that case. They would actually be whatever the circumstances were of the taxpayer. I'm not going to go through lines 4 through 7, because those are kind of for daycare facilities where you're not really using one room exclusively. You've kind of got these kids maybe working throughout the house, and so there's a more complicated way or a different way of calculating the percentage, but that's it's not the majority of the cases that you see, although it certainly does exist. So once we have that percentage, and in this case, in our example, our 100 square feet divided by the 1,000 square foot home to get 10%, we're going to deduct indirect expenses at 10% and direct expenses in full. And so let me give you an example of an indirect expense. An indirect expense might be heating the home, and so we would end up with 10% of the home heating cost. A direct cost might be that we replace the carpet in just the office, and so now since it's isolated to just the office, that's direct, and we're going to take 100%. And so you can see in lines 9 through 24 here, we've got our typical expenses. So we've got some casualty losses, mortgage interest, which is usually always indirect, real estate taxes, which is indirect, and we're going to put those together and come up with some expenses. And then we drop down below the gray boxes. The gray boxes are kind of helping us to just do some calculations. Then we're going to do insurance, rent, repairs and maintenance, utilities, and then certain other expenses, and we're going to pull those together. Eventually, the direct and the indirect expenses end up being combined down a little bit further on this form. And then ultimately, we're going to take some depreciation, and that depreciation is going to be, in our example, 10% of what the depreciation would be for the whole home. And so just for this part, refer to our discussion of depreciation, and we'll assume that you already know how to calculate that. Now I've got a little bit of a problem here because I can't scroll down to see the rest of the form because of how I've got my recording box set up here. So that's a little bit unfortunate. So I would encourage you to pull out an 8829 and look at lines 32 down through the bottom. What's going to happen, part 3, 36 through 41, is where the depreciation is calculated. And again, if you have practiced your depreciation calculations, there's nothing tricky there. But what happens just off the screen below the area that we're looking at here is there's this test that goes on. Basically, most of our home office deductions are limited to our business profit. So if our home office deductions were $2,600, but our business profit was only $1,300, we're only going to be able to deduct $1,300. So in other words, you generally can't use a home office deduction to create a loss on your Schedule C activity. Now, some of the expenses that we're not allowed to deduct are carried over to future years. And so there's a little bit of a calculation of the carryovers down at the very bottom in part 4. So that's just a very quick overview to sort of summarize. Generally, we have to have an office that is regularly and exclusively used for our business, exclusively being the tougher rule to test for tax clients. We're going to calculate a percentage of the square footage, the square footage of the office divided by the total home square footage. Then we're going to allocate expenses to direct and indirect. And then when we're all done with the expenses, we're going to test those expenses against the business profit and deduct the lesser of the business profit, or our home office deduction. The home office deduction is a little bit of a red flag for the IRS. It's not a huge one, but it is the type of thing that the IRS is, they just know that some Schedule C taxpayers are exaggerating their home office, or they don't legitimately have a home office. And so it's kind of because it's an area where there's a high potential for abuse, it receives a little bit more audit attention than some other areas of the tax return. So again, very brief overview, but I hope that gives you sort of a sense or an understanding of some of the issues related to the home office. Thanks for joining us. Take care.